Hi everybody, welcome back to my YouTube channel. I want to say welcome, welcome, welcome. I know it's been a little while since I have made a YouTube video, but we're back at it and ready to go. So with that, welcome, cheers. I hope you all had an amazing week and are enjoying the weather because it is gorgeous here right now. And yeah, I just wanted to go over my trade that I took this morning and hopefully just kind of give you guys some details and let me know if you like this video. So let's get right into it. Cheers. Okay, perfect. So let's start at the daily chart. When I'm looking at the daily chart, what I'm looking for is inefficiencies, liquidity, anywhere that the market would likely to draw towards. So if we go to the weekly chart, we can see here that we have this weekly FVG already filled in and we traded out of it. So filled it in, traded outside of it, and now it's a balanced price range. So I do like that. We also have this weekly volume balance up here. That is a potential target. And we have this small little weekly fair value gap right here, which we actually did trade into this week during Monday trading session. So go back to the 1 day. We came up, as you can see, these are all daily charts. So we filled in this fair value gap, weekly fair value gap, we came back down, and then on Monday we traded lower, filling in this weekly fair value gap, which is also a daily fair value gap. And then yesterday we traded higher into this daily order block and reaching into this small little daily volume imbalance. Can you see that? So since there is no body right here, we are looking as a potential draw on liquidity in this daily volume imbalance. I also have this, we'll go down to the lower time frames and I'll kind of show you guys everything, but we had traded into the weekly fair value gap already this week once, sold off. Yesterday we had a nice buy day and now we're kind of like ranging a bit, came back down to this open potential, or this high potential immediate rebalance, which could look good for our buys. And yeah, so that's the daily chart. Let's go down to the 1 hour. So remember, we keep the opening range gaps for a minimum of 3 days. Yesterday was cool to see that this opening range gap has been filled. So we came up, filled in this opening range gap, came a little bit higher just to fill in these inefficiencies right here, and then sold off this morning. So I have this consequent encroachment of the 1 hour wick labeled, because if we can get into this price action and past it, I'm looking for more buys into this daily volume imbalance here. But we filled in the opening range gap, so we might just sell off now into like lower imbalances here, possibly the new week opening gap and Monday's low. But if you can see, we already filled in this imbalance here this morning when the news was released. So I was like, okay, we filled that in. Higher time frame analysis, filling this in. I'll mark that out right now just so you guys can see. Right? Look at that. Beautiful delivery of price. Filled it in perfectly. We had another retest before buying. We also took out these relative equal lows here and the opening range gap. We came down and we sold off. So we still had this top of the opening range gap to be filled in, and I wanted to see the market potentially reach for the consequent pushment of the 1 hour wick. Perfect. So let's go to the 15 minute. 15 minute Same thing, we took out these relative equal lows here with the news release at 9:30. Came in, filled in this 1 hour fair value gap right here before we kind of consolidated. Now we're in ICT Silver Bullet trading range, which is my favorite. I wait for that to be, for us to trade, take any trades. Go over to the 5 minute here. Again, we have the relative equal lows traded into, the 1 hour fair value gap traded into, and then we get into the good stuff. Now that we have our higher time frame analysis, we know that we've already taken out liquidity. We traded into an imbalance. We have our draw on liquidity, which is the fill of the opening range gap and the consequent encroachment of the 1 hour wick. So we trade higher, making a break of structure here, leaving this fair value gap, which is actually an institutional order flow entry gel. Why? Because if you look up here, this low of this candle is 4406.50. This low of this candle is the exact same number of 4406.50. So it's an institutional order flow entry deal because we didn't go quite into it, but we tapped right at the high of the fair value gap. Now we go down the time frames. 4, 3. I like the 3 minute time frame because we could see our break of structure here, took out another area of liquidity, boom, traded higher. That's a displacement run. Have this 3 minute fair value gap, we trade into it perfectly, have it hit our target of the consequent encroachment of the wick or the opening range gap. So then we take our tool, measure out 5 points for our stop loss, and perfect the consequent encroachment of the 1 hour wick. It is 14 points away, so that is perfect. It has to be a minimum of 10 points to your target. So the fact that we have 14 points to our potential target doesn't mean that you hold out until we reach final terminus, but as long as it is 10 points away, you're good to go. Really, our first target was going to be the top of this opening range gap, right? So break of structure, displacement run, 3 minute fair value gap, other confluence with the institutional order flow entry gel, the fact that we traded into the higher time frame 1 hour fair value gap, took out the relative equal lows before going higher. This right here is a classic 2022 ICT mentorship entry, and in the silver bullet time frame of 10 a.m. to 11 a.m. Now, if you can see, for tape reading, we enter here. This will be our first entry. We take partials here, and there's no other entries, right? Until we get to here, which we could have another potential entry to reach here, but we want to be trailing our stop loss, and since I'm trailing my stop loss, it would have been right here, the wick, or the consequent encroachment of this wick right here, because we have our fair value gap right here that I wanted to watch, and we eventually hit the stop loss right at 11:12 a.m. Eastern Standard Time. Yes, we have all these inefficiencies here. Yes, look at the market going down, filling in these inefficiencies, but I like day trading. I'm more of a scalper, so I don't mind trading the sessions, not the full daily range. I believe we could go up into the 1 hour wick, or the consequent encroachment of the 1 hour wick, and if we continue to buy, possibly into this daily volume imbalance right here. So the fact that we are selling off, hitting this fair value gaps, filling in the imbalances right down to the T here, and now we're continuing to buy up. Never closing in this order block right here can be a sign that we potentially want to see higher pricing into the afternoon and potentially into close. So anyways, that is my trade setup from day to the 3 minute on what I'm looking for and how to profit on a ICT silver bullet trade. We did manage to get a full 13 points before it turned around on us and hit our stop loss, but that's just the game, you know, we may be wrong, but profitable. So anyways, that is it for me. I'll keep this video short, and I hope you enjoyed. I will see you all next week with another trade recap. So have an amazing day, have an amazing rest of your week, and we will talk soon. Okay, bye now.